Hi, this is Bill Wood with Disciplined Trading Decisions. Time for the weekend update for the crude oil futures market. But first, trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Welcome to the weekend update for Monday, November 7th. We are covering the crude oil futures market, so let's take a look at the monthly chart. So on the monthly, we're in a downtrend, and this could possibly be 5 waves: 1, 2, 3, 4, 5 impulsive wave. And what we have up here is we have a balance area up here. On this week here, it peaked, or this month here, it peaked above balance, and then it came right back in. And generally when that happens, your target is the opposite side of balance. On the weekly, you can see that it's respected this Andrews pitchfork pretty well. We have a lot of room to go down on the stochastic on the weekly. And right now, my target is the opposite side of balance, and I'm going to front run that a little bit at this Andrews pitchfork line because it's been acting so well around. I'm not going to go long here. This is a target. This is the day time frame chart, and if you saw the video for the S&P 500, they're both in a similar situation. They're both at the 200 period moving average, and they both are one time framing lower. This is 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row. So you would think that without a pullback that we are getting inventory is getting short. And once everyone is short and there's nobody left to go short, then usually you have a little bit of a relief rally. So I'm not saying that that's going to happen now or that this is going to be support. I am not getting long at this point. I'm just saying be careful, because you could have a short covering rally come up soon. Again, like the S&P 500, we have broken a trend line here. So I'm not saying that we're now in a new downtrend, but what I wait for is we've broken trend here. So I wait for a retracement. And then if we can break wherever it reversed at, if we can break that level, then I consider us to be in a new trend. Now, what's the likelihood of us getting under $26? I don't know what the likelihood of that is. So as far as I'm concerned, we're still in a trading range, and I'm going to trade it as such. This is market profile. Again, very similar to the ES. We had balance up here that we've broken down out of. We've been one time framing lower. I would imagine that we're getting pretty short in the hole. If we are getting short, I would expect a pullback, and the structure of this day is terrible. So the odds are that this area here will be repaired, and that's all it means to repair it, is to go over that area once or twice with a 30-minute bar. I talk a lot about this in my videos. We had this separation of 2 distribution points here on this day. So on Thursday, when it opened in this distribution. So it started to come down, and I'm waiting to see if it can fill in these single prints. If it cannot fill in those single prints, then that lets you know that the market is strong, and I would expect a move up. Well, that's not what happened. In fact, just the opposite happened. Not only did it fill in these single prints, but it got acceptance down into this range here. You can see that in 2, 3, 4, got acceptance down here. So I was very much expecting it to break that low. I know you're not going to be able to see this well, but when we finally do get a retracement, how high can it go? Not really sure. This day here on the 31st doesn't have great structure up here. That may want to be repaired. We have a gap here, poor structure here. So this whole 49 to 48 area may want to be repaired. That brings us down to the bottom of this balance area. So that could be resistance up in this area if we do come up and fill this area in. Also, we have a poor high sitting up here from the 19th up around 52.50, something like that, 52.25. And generally poor highs like to be repaired. So if we retrace, and that's a big if, and we get acceptance back into this balance area up here, and that means, 1, 2, 3, 4 30-minute bars, then generally the target will be the opposite side of balance. So the area right around 49 is going to be my area to look to see if if the market finds resistance. So just as a recap, this is the daily chart. We have come down around 16% without a real pullback. So I think that we may be getting a little short inventory wise. I'm expecting a pullback. I'm not going to be going long on that pullback. I may scalp in and out, but I'm looking to see if when we pull back, if we find an area of resistance to roll over and start a new downtrend down. Knowing full well that this just may be an A, B, C correction. Well, that's what I have for today. This is Bill Wood, and if you're watching this anywhere other than my blog at disciplinedtradingdecisions.com, please go there now and check out our other resources. And while you're there, sign up for our weekly newsletter, and you can get these videos sent directly to your inbox. And this is a reminder to trade according to your trade plan. Don't do what I do. You have to believe in your analysis in order to stay disciplined and true to your plan. Hey, I really appreciate your likes, your comments, and your shares. It all helps to get the word out. And remember, stay motivated, stay focused, and stay disciplined, my friend.